So the statement of cash flows is a true or false required financial statement. It is a required financial statement. So along with the P&L and the balance sheet, you're required by GAAP, which stands for Generally Accepted Accounting Principles. You're required to do a statement of cash flows. I'll tell you my first job out of grad school, first set of audited financial statements or financial statements that I needed to get to an auditor. I couldn't get the thing to balance. I'm like, I guess I just need to quit. I mean, because it's a puzzle, and like in a P&L, you do the P&L, and it's like, oh, well, I hope the net income's right. I hope I made all my accrual entries right, blah, blah, blah. The statement of cash flows, it balances. You know precisely what number you're working towards. What does a statement of cash, what class did you guys already cover this in? Accounting 2? 2? Yeah. What does a statement of cash flows tell you? Or what's the purpose of it?
Outline where all the cash is going,
coming in from and going to. Yeah? Why can't you get that from your P&L?
My income is rolled into different categories.
It includes things like P&L that aren't exactly cash.
Your P&L isn't cash, is it? We know that because your P&L is done on what basis? What's the name of the accounting method we use? Accrual. And accrual isn't cash, is it? So you can't really look, and it's always astounding to me sometimes in the third, fourth semester, accounting students are still kind of struggling with, is your P&L cash basis? Heck no, it's accrual basis. So really what the statement of cash flows is doing is taking all that work we've done to do accrual accounting and back out all the accruals and take it back to the bare bones of cash. Because you can't look, can you be profitable and lose cash?
Yes.
Sure. Can you be unprofitable and have gained cash? Sure. I lost a bunch of money, but I issued $1 million of stock. So I got a ton of cash, but I had an unprofitable year. Or I'm profitable, right? My P&L shows net income, not net loss. But I didn't, I had a negative cash outflow because I just bought a new manufacturing plant in Veracruz, Mexico. So at the end of the day, you have to be profitable and positively cash flow to be a sustainable enterprise. So what order do we prepare our financial statements in? What do you do first? Why do you have to do that first? Yeah, because you have to take your net income to your and what do you close your net income into? You do your income summary, but honestly, that's just like a little tool you use in accounting 1. In the real world, you don't. It just kind of ends up going straight to where does income summary go to now? On the balance sheet, it goes into what account? Huh? Yeah, it goes to your equity section. If you're a sole proprietor, it would go to, Lisa Swallow Capital. If you're a corporation, it goes where? Retained earnings, right? So you've got to close your income or loss into your equity section to make your balance sheet balance, right? So this guy, you have no idea if it's right or wrong, your P&L, right? But in order to get your balance sheet to balance, you have to make sure that you matriculate the number in there, right? Then the third statement that you prepare is your statement of cash flows, where you're going to be using both of these to prepare this. So you can't even look at the statement of cash flows until you're 110% sure that you've got your balance sheet and P&L organized or balanced, reconciled. Okay, so then the primary purpose of a statement about cash flows is, you know, I mean, this isn't particularly profound. The purpose is to show cash in and cash out based on 3 categories or 3 pools. Any idea what they are? All of your operating activities. Where is that going to come from, primarily? I mean, but looking up at these 2 other financial statements up here. Your operating activities really is your profit and loss. That's what I'm in the business of doing. Right? I sell a service, I sell a product, I manufacture something, I broker it, I wholesale it, whatever it is you do. Most of that's going to flow through the P&L. In fact, on our P&L, we go from revenues minus expenses to what? Operating income. Before we go to the other section, right, all the weird stuff that isn't really what I'm in the business of doing. Like I sold a piece of land, or I sold some stocks, right, but that's not what I do. I'm not a realtor or a stockbroker. So your P&L is very closely tied to your operating activity section of your statement of cash flows. What's the second category? It's all of your investing activities. And investing activities are from buying and selling long-term assets. Yep. If you buy a piece of land, that's an investment. Unless you're a realtor. Then it's an operating activity, or a developer, I guess I should say. So 2 things come under investing: buying and selling long-term assets, and lending and collecting money. So if I lend you $500,000, am I doing that as part of my operations? No, I'm doing that because I want to generate what? Income, interest income. Again, if I'm a banker, it's operations. But if I'm a farmer, it's investing. The reason I'm lending you money is to earn interest. Or I've got a vested interest in seeing your business succeed because it feeds into my business. Maybe you're my bottling plant and I'm a dairy farmer, right? Okay, so what 2 things go under investing then? Buying and selling long-term assets like what? Land, equipment, property, stocks and bonds. Sorry, Sherry? Yep, PP&E, property, plant, and equipment, but also stocks, bonds, you know, intangible assets, so to speak. Portfolio assets, better term. Yep, and then the second thing that goes under here is collecting, or lending and collecting money. Okay, third category, financing. What kinds of things go under financing? Borrowing money, okay, which is different from lending money. I lend money if I'm investing because I want to earn interest income. I borrow money because it's a way of financing my business, isn't it? Okay, so borrowing money and repaying it goes down here. How else do I generate capital? Issuing stock, exactly. Issuing stock or bonds. Bonds is borrowing money, so I've kind of already said that. But yeah, it's issuing stock, issuing bonds, paying dividends. Really, any equity transaction goes down there. So like paying dividends, issuing stock, repurchasing stock. What's that called when we repurchase stock again? Treasury stock. all those kinds of transactions, go down here. And are you going to have inflows and outflows in all these areas? Sure. And when you add them all together, they're going to explain the difference between your beginning and ending balance of cash. So you might say all year long you only had a $1,500 difference between your beginning balance and your ending balance, but that could be $1 million here minus $2 million there plus $985,000 here, right? So it tells the picture of the company. So if you just look at a balance sheet, for example, in PP&E, and you see that went up $500,000, does that tell you really anything? Now, do you see in there that maybe you divested of a plant in Cuba for $3 million and then bought another one in Puerto Rico for $4 million? But here you're going to see that. Purchased equipment, sold equipment, purchased plant, sold plant. So you're going to see line item by line item. Okay. If I'm going to just kind of go past that. So, and then this is just a quirky thing. It doesn't, I mean, I do know why it makes sense, but it was something I always struggle with, so I'm just going to say this flat out. Where would you think that receiving dividends and receiving interest would go? You think? It doesn't. They go in operations. I don't really know why. Receipt of investment revenue, interest and dividends, and payment of interest to lenders. So interest revenue, interest expense, and dividend revenue all go in operating activities. Paying dividends goes in financing. The rules are super straightforward in my mind, except for here. These are like, this is quirky to me, so that's why I'm putting it up specifically. The only other thing I have to tell you, and then we are just going to launch in, because there's really no other way to do these other than to just do them, is, well, I guess two things I want to do. Is so you do your statement of cash flows, but then you've got this section at the bottom. So we're going to set up a model and we're going to plug in numbers, and it really is just like a big puzzle. But then at the bottom you have this section. I mean, you don't have it. Everybody doesn't have it all the time, but you can have a section called Significant Non-Cash Investing and Financing Activities. Keyword being obviously non-cash. What the heck are they talking about here? That's exactly it. I gave you some stock and you gave me title to your piece of land. Super good question. Depreciation goes up here. Operating. And when I say depreciation, I also mean amortization, depletion, any of those non-cash activities. They are part of operations, but they don't take cash, do they? So let's just do some more examples of this. Significant non-cash financing investing. Joe said stock for land. Treasury stock goes under financing because I have to pay you cash for it if I'm buying back your stock. I'm sorry? Bartering's operational. I'll do your tax return if you'll cut my hair. Stocks what? Yes, a stock split would go here. Sure it would. If I convert stocks for bonds or vice versa. Right? So I have bonds and there's a conversion characteristic. Or stocks, whichever way. The point being is it fits in these two categories and it's significant, but no cash trades hands. So I wouldn't see him up here, but it's important enough to know, like, hey, you just traded, $4.8 million in stock for a piece of property. Right? That's something that somebody reading the statement of cash flows wants to see, and they're not going to pick that up on the balance sheet because it can be embedded with lots of other transactions, right? Okay, very, very last thing, and then we will start, is there's two methods for doing this, doing these statements. There's the direct method and the indirect method. And we are only learning the indirect method. Something like 90-some-odd% of preparers use the indirect method. Yeah, I mean, because the direct method is just really a pig to do. And secondly, in the direct method, you also have to prepare it using the indirect method. So it's like, I choose just doing one. So that's all we're learning. Okay, so basically, we're just going to launch into it. The way that you start a statement of cash flows is you have to collect a bunch of data. So I'll have that posted by like 2-ish. Okay, great, thank you. Sure. What do you have to collect? You have to collect, and we're looking at it, a comparative balance sheet. Did everybody get one of these guys? Yeah. Comparative balance sheet means beginning and end of the year, right? So what 2 years are on this one? 2015 and 2016. And what do you notice about the order of the columns? It goes from right to left. Don't let that throw you. Just be super aware. That's how comparative balance sheets are prepared. Yes. We're used to writing from left to right. And again, I can't really tell you how come, but I just know the comparative balance sheets is always opposite. The newest date is furthest left, and that's not how we're used to reading things. So you get your comparative balance sheet, you get your P&L. Then you have to do something on your comparative balance sheet, which is set up this column called change. So I'm going to give you a couple minutes to just go down. All we're doing here is our current assets and current liabilities. But you would normally have the whole balance sheet, right? So we're just starting with a little kind of intro to this. So you need to go down and say how much, and bracket it if it went down, and make it positive if it went up. did everybody get that filled in? Looks like I had a couple decreases and 4 increases. And the next thing, and again, we're just doing the operating activities, which is the first section. But obviously, when we get all the way through the CMA, you're going to be able to do it for the whole, all 3 sections, but the operating ones just kind of like a little intro. So the next thing I've asked you to do is to look at your P&L, pick up the net income number, and scan it for non-cash items. I'm going to give you each couple, like a minute to do that. So what was my net income? 35,000. What were my non-cash items when you scan the P&L? Clearly depreciation expense. Go ahead. Yeah, did somebody give you a check for the gain on the sale of land? It did. It did, because that's what, although, yeah, because land doesn't have depreciation, does it? So yeah, so that is explicable by my property value went up. But did I necessarily get a check for 20,000? Did I maybe get a check for 220,000? Sure. Where are you going to show the check for 220,000? Which category? Go back and read the definitions. If I sold that piece of land for 220, it's an investing activity, isn't it? So in other words, when you scan the P&L and you pick up those non-cash activities, they all go which section? All the non-cash activities on your P&L go where? Operating. But the actual sale of the piece of land went where? Investing. It's non-cash. And then somewhere, obviously, I'm going to have to find out, well, how much cash did I get for the land? And we're going to analyze the T accounts to do that. We're not doing that on this one, but we're going to do that as we get more sophisticated. Does anybody need me to say all that again? Because this is kind of complicated. Okay. So where we're at right now is, where we're at right now on this little starter guide is we're just focusing on operating activities. And in order to do that, you do 2 things. You pull out your comparative balance sheet and you set up a change column and you calculate your changes. What's on this balance sheet? Do you have a full balance sheet here? No, you only have what? Well, not even all assets and liabilities. Current assets and current liabilities. Look at all of those accounts and tell me whether you think those are operating sorts of things, investing sorts of things, or financing sorts of things. They're all operating. All of your operations go through, AR and AP and prepaids and revenues and, right? Current assets and current liabilities are operations. Yeah, I'll reiterate that again. So I do that, and I've got my list of changes. Then I go down to my P&L, and I ask you to do 2 things. 1, pick up the net income, and 2, scan it for non-cash items. And everybody immediately said, oh, depreciation's non-cash. I see that. But then we get a little bit more complicated, and we say, well, there's this gain on sale of land. And that went into my net income and it made my net income go up, right? But did somebody write me a check for it? No. So if I'm trying to convert my net income number to net cash flow from operations, what do I have to do with that gain on sale of land? Subtract it. So just keep that in the back of your mind. So part 2 on that transaction, okay, so I know that I'm going to have to deal with that in operations. Part 2 of that transaction is, do I know how much I got for the piece of land based on what you have in front of you? No idea. But when we figure that out, when we look at our land T account, where is the amount of cash you actually got for the land going to go? Investing. So what I'm saying is, if you buy or sell a long-term asset for a gain or loss, it impacts 2 sections of your statement of cash flow. You should probably write that down in big letters. If you buy or if you sell a long-term asset, or a gain or loss, it will impact 2 parts of your statement of cash flows. If you sell a long-term asset for a gain or loss, it's going to impact 2 parts of your statement of cash flow. And the what? What's the other section? It's going to impact your operating activity section. And it's going to impact your investing section. Because we know that buying and selling long-term assets goes in investing. All right. Step 3, set up your model. Well, I guess this isn't really step 1, 2, 3. I mean, this is, you kind of all do this at the same time. Set up your model. So let's go set up our model. You always start a financial statement with what? Title. So write the name of the company, what we're looking at, and what year we're looking at it. What's the you just love you one. Now maybe it's a big gain. Sure. Okay, so your title, statement of cash flows, demo company for year ended 12/31/16. Well, yeah, it doesn't matter. No, probably company first. Yes. Because we have 2 balance sheets there, 12/31/15 and 12/31/16. And 12/31/15 is the same as 1/1/16, right? Okay. Here's the model. Let's write our 3 sections. And leave a bunch of space under operating because it's always the longest. And again, on this project, we're only doing the operating section, but I want to show you how to set up a model. It's going to look the same every time. And what's my last section? And when you add together all the changes in your operating and your investing and your financing, that's going to total to what? Not your ending cash, your what? Yeah, your difference. Yeah, it's the difference. It's the net change in cash. Right? So if I add up, we can't see all of them now, but we know there's 3 sections, operating, investing, and financing. And some can be up and some can be down, or they can all be one direction. I mean, it can go any which way. But when you net them all together, it's going to explain the difference in your cash between the beginning and the end of the year. And we call that net change in cash. Where am I going to get that number? Yeah, I mean, I could get it from my T account, but I'm going to have a comparative balance sheet sitting in front of me. And I'm just going to pull the number. I started with 80,000 and I ended with 82. My net change in cash was a positive 2. So to prove this number, which was how I started the whole lecture, I was like, every time you do one of these, you can always back in till you know whether you're right or wrong. Whatever you come to is a total of these 3 categories, right? If you add that to your beginning balance, what are you going to get? This is the difference, plus my beginning balance gives me my ending balance.
So, on your comparative balance sheet, do you ever have your cash account?
It is there. It should be the first thing there, but we're only doing operating activities here. And whatever my net change in cash is the total of operating plus investing plus financing. And I add that to my beginning balance, it's going to give me my ending balance. And if it doesn't, that's what I'm saying. You can't, I mean, you know if you've done it right or not. Okay, I'm going to leave that for now. We will work on demonstration company and then start on another one on Friday. And really all you need to do for Friday at this point is to read the chapter.